Well, let's get to what we're seeing in the property market at the moment, and obviously in the wake of the Reserve Bank move yesterday, or no move, as the case may be, and also what we're seeing with those property valuations. We are joined by Anthony Landahl from Equilibria Finance. Anthony, good to see you again. So we knew this was coming, didn't we, off the back of that inflation data we got last week. But it was interesting to hear from Michelle Bullock, and everyone wants to know, of course, what is ahead, what's to come. Speculation, we may be at the end of the easing cycle.
Yeah, nice to be here. It's a massive shift in sentiment and rhetoric from 2 or 3 weeks ago, where there was talk of another cash rate cut just yesterday, and obviously then people were even talking about would there be another one. The banks were projecting another couple of cash rate cuts from where we are at 3.6. You touched on it, but that inflationary data, the headline inflationary now at 3.2% is outside the RBA's target range for the first time in a long time, and their trim means at 3%. And the rhetoric coming from Michelle Bullock very much in her statement yesterday was very much in and around concern that inflation's going to be outside or around about that 3% or outside that target band for well into the next calendar year, and that they're determined to get it down to 2.5%. What that's really saying is that the cash rate isn't going down for a long time. In fact, there's some economists even suggesting maybe, depending on inflation, the next move could well be up again.
So now, in light of the rate cuts we've got thus far this year, that's broadly been supportive of the property market, of course, and we just got to read early in the week from Totality, home valuations across the nation up more than 6% over the year. That's been quite phenomenal growth. So, given what you've just said, the outlook for rates, what impact is that likely to have on values going forward, do you think?
Yeah, that's interesting. The Totality data had the headline growth rate nationally at 6.1%. Brisbane and Perth were up around 10% growth for the year, which is very, very strong. October's growth of 1.1% is the strongest growth in the housing market we've had since June 2023. That's on the back of rate cuts. I think the other thing that has been driving growth has been, there's a lot of emotion and sentiment driving growth at the moment. People trying to chase what they perceive as a very, very strong market. The first home guarantee scheme has absolutely driven growth in that lower 30-40% affordability sector. The rate cuts have seen a drive in investor growth, more affordable, less cost to get in. So that's what's driven the growth. Are we going to and that 75 basis point decrease we've had since the first rate cut in February has already been eaten up by the increase in median house prices. Median house price in Sydney is now about 1.575 million, which is just unattainable. My instinct is that we will see a little bit of some subdued behaviour now leading into the next calendar year. I think we will just see a little bit of a slowdown, but I fundamentally think that the housing market's going to stay strong.
So what? Continue to grow, but just not at the rate that we
at a slower rate of growth.
Yeah.
Absolutely. The big issue that's not being addressed is on the supply side. That's what's going to keep growth strong. We've got first home buyers being able to access the market. We've genuinely got that 75 basis points we've had cut to date is bringing investors back in the market. I don't think that's going to stop. It might just be the rate of growth does slow, with a little bit more uncertainty about what's next with the cash rate.
What is that doing just as far as demand for loans? What sort of loan growth are you seeing at the moment?
Yeah, well, tacitly, even just within in our business, we've had about 30% inquiry increase over the last couple of months. We've seen that also come through in the ABS data. There's been a lot of growth in credit. A lot of that's come from investor credit flows are up around 35%, which has grown quite strongly over the last 12 months. That's not helping the growth in the market, because they're now fishing in the same pond as a lot of those first home buyers in that affordable market. So credit growth has been strong. It will obviously get impacted potentially by what happens in the market next. Interest rates have been very competitive. Those variable rates We've seen a lot of good competition for home buyers and people looking to refinance. We were getting fixed rates under 5%. Is that going to change on the back of what we've seen recently with the inflationary data and the RBA? I think we will get a bit of a shift. Some people are now talking to fix before fixed rates actually maybe stop being offered at the rates they are right now.
And so you're seeing that particularly with investors. What are you seeing from the business point of view in terms of appetite for credit at the moment? Is it about growth for them, or is it about keeping afloat? I mean, I guess more broadly what we're seeing in the economy.
Yeah, the big challenge we're seeing with businesses is cash flow. That's easily to say, but a lot of that's being driven by increased costs. We're seeing a lot of businesses being challenged by cost increase, and that's now flowing through to them passing it on to the consumer. A lot of businesses absorb those cost increases for as long as they can. A lot of that's now flowing through. We're seeing more businesses look at having to go on tax payment plans, for example, to manage their costs, to manage their cash flow, essentially using the ATO as their funder. So we are looking at working capital facilities. But a lot of those working capital facilities now, or those overdrafts, are not so much relating to growth, they're actually relating to managing their costs. We've seen a shift in that absolutely in the last 6 to 12 months.
All right. So do you get a sense perhaps then, Anthony, that market sentiment is about to shift? I mean, you've spoken about what you're seeing in property, but given what we've heard from the RBA, perhaps people are going to start thinking a little more negatively about the future and in terms of not just property but overall the economy.
Yeah, I think there will be a bit of a shift. I think it's a shift, the inflationary data on yesterday for a lot of economists, a lot of the banks around what they're talking about now. I think that will flow through to housing. I think housing will grow at a slower rate because of the fundamental supply and demand mismatch in the market. But I think generally speaking, there will be a shift in sentiment, and that'll come through to business, that'll come through to the housing market. It'll be really, really interesting to see what happens. And I know Michelle Bullock raised it as well. What happens with consumer spending? What happens with private demand? Will that slow down? Will they in fact need a rate rise? She didn't say that, but she didn't rule it out to slow some of that inflationary pressure down.